Hey, it's Mack with PriceActionTradingSystem.com, and it is Wednesday. It's April 30th. This will be our chart lesson for today, and it's right at about 12:30. I traded a little late. I was hung in a trade here that took a little while to work out, so I'm just now getting done. But I wanted to wrap up, obviously, before 1 o'clock. Today's FOMC announcement day, and at 1 o'clock, this thing is probably going to get crazy. And this is actually some fairly this is probably a fairly decent move for FOMC day. Usually they're hung in little ranges like this right here. So this was refreshing to get this much movement before noon on FOMC day. So I felt pretty good about what we had for the opportunities we had today. I didn't do as well today as I do on some days, but I still made money today, and I'm done by 12:30, and I'm going to call it a day. So we'll do the chart lesson. I did want to show you something here too. We had two channels. We had a real tight channel working up here. We got the break, the move to a new high. That was a great setup. But when that formed, if you drew that off the highs and you drug it down, that formed right off that line too. Originally I had it here, but sometimes you have to adjust it a little bit. And if you adjust it, you got a bigger channel there, and that looks pretty good to me. Actually, if you draw it right off the bottom of those first two swings, it fits perfectly. So I think there's a bigger channel, and notice the break, and look how far it moved. But somebody, one of the guys wrote to me, he says, "Hey, we didn't get a retest of the high." I told him, I said, just be patient. I said, maybe we couldn't, I was looking at this as the high of the range at that point, maybe. Um, and I said, maybe we couldn't get back through that high. And when it came back to here, and that was all we're going to get. But I told him, just be patient, see what happens. And of course, he writes me back a little later and says, "Hey, you were right. I had to be patient." And myself, I had to be patient because I took a trade here. I had to sit through this thing. So, um, so, but anyway, the rules generally hold. We haven't got a new high yet. Will we get one? I don't know, but that's good enough to be a retest when it looked like there was not going to be one. And I really think there's two sides to this range here. Originally, I had the range like this, and that may be it. And we just may have the failed breakout, and we couldn't come back down. And maybe we're going to make another leg similar to that. We'll see when the news comes. We could, when the news comes out, things could shoot straight up or straight down. So we'll see. But for what I can see now, it looks like kind of a dual range with this being the low part and this being the high part. And it's pretty much a measured move. Once we broke higher and started going higher, if you just looked for a measured move uh, from this range to this range, you would have seen this. And there's also another way you could have looked for the move. You could have looked at like this. And if you move this over, you can see we pretty much got that, but then we went and got the measured move for the actual channel. So there were a couple of different ways to look at where, find a target here. And, that's what might keep you in this trade a little longer, shooting for a measured target of what you've got below here. And it's really hard to determine exactly. I believe that to be the exact middle where you get more stuff across the top. And this tends to fit well at the bottom. So, I don't know. Sometimes it's hard to determine exactly where that range is, but you can see that's pretty much it. We came up a tick short, but we're not done yet. We may make our new high here yet. I would be surprised if we don't turn down from here. But when I move this down to where you get the most closes, and you move this one down to where you get the most touches, I think that fits pretty well, and that's where I left it. And that is a measured move there. So, you can't always get those measured moves exactly right, but as long as you can get it within a few ticks, they're going to help keep you. They're going to give you targets to shoot for, and doesn't mean you're always going to get them. They're just a tool. You don't want to trade by them. They're just a tool to help you get to where you're going to go. And you can see all the short-term channels, they all worked just like you would expect. And that brought up another thing we talked about. I hate to even go back to this again, but I think it's really important. Is if you remember, we had a lot of conversation on one of the videos, the video from actually this date. What date is this? 4/27, about going short here. Well, through all that stuff, we didn't even talk about one of the most important tools we got to help keep you on the right side. There's your channel on the way up. There's a break, move to a new high, and then guess what? It sells off. So, through all that, I got to studying this a little bit more just to see if there was anything else that you could look at that might keep you on the right side. And and I know I drew this on my chart when I was trading. I can't remember. I'd have to go back and look at the video to see if it was there. But we didn't even discuss that. And that's one of the most important tools we got to keep us on the right side. And even if you use the two swings, you can see you still got a break and at least a retest of that um, trend line. But that doesn't really fit too well. You can see it doesn't fit very well. There's nothing that tells you that's it. I mean, when you start to get a move like that, you got to assume that that's a short-term trend right there. And there it is. And there's your break. There's your move to a new high. You pull back, you get a lower high and a second entry short. Then you get another trap, a failed second entry long. So entering either place there. So I hate to even revisit that, but I just wanted to make sure that people understood there's different ways to get there, and there were multiple reasons to take that short, especially the one off the trend line. Of course, this one's obvious right here because it's off the trend line, and that's why you couldn't get back up for a retest even if you drew it off those first two swings there. Let me just put that back on there so you can see it with a bigger line. Even if you use that for your first two, you tried to make a new high, but you couldn't get above the major trend line there. So that's another reason. And then of course, there's the fact that you got a little trading range, which we talked about this one, but I'll put it on there just to show it to you. And I would have had my lines on those closes like so. And you got the failed breakout to the high side. Well, you actually failed out the low side first, failed out the high side. You didn't really have a range when it went down here, but by the time it bounced here again, and then you get the little breakout pullback short, there's another reason to take that short right off, plus right off the main trend line. So there's many different things, but for whatever reason, we got so caught up in discussing this that we didn't even discuss the main thing we look for that usually keeps you on the right side is the break of that trend line, a move to a new high, and then a lower high followed by the trend starting back. So hopefully that's helpful for anybody that was still struggling with that. So we're still trying to make a new high here. There's only about 20 minutes till FOMC news. We'll probably be done with this chart lesson by then, but if we're still around, we'll watch and see what happens together in this video. But let's talk about the trades I saw, and then we'll probably wrap it up. But started out, we had this channel working up when I came in. We got a little break outside of here during the pullback to the EMA. We shot higher and made a new low. There was actually some resistance right across here, so it's like a failed break back above those highs. When you don't have any more, it's actually the same thing right here. You got kind of a double top from the overnight highs so far to right here. It's like a little failed break. But what I really liked about this trade was the fact that it broke. Let me make it a little bigger. It broke higher above that bar. We've already had the break, the new high, and this is a first entry, but when it broke higher and turned and went out the other side of that bar, all in the same bar, I like the idea of dropping a limit order right there, or maybe a tick back in, and you see it would have come back and filled it. I think it actually would have filled you on this bar, but definitely by this bar, and then off it goes again. It is a first entry, so I marked it as a little more aggressive, but if you saw the channel and you realize that there's these other highs across here, and the way that candle act, that's a really bullish move. What it is, they just trapped a lot of people that went long right here, and the smart traders realize what's going on, and they all start taking profit and exiting, and the rest of them have to follow suit, and it runs it down. And then you get a first entry long, pull back second entry long, so that's almost a failure, but it's a second entry short counting off the highs. First entry, pull back second entry, and that's just one leg down. And now you got two legs back, you're most likely going to get another leg down. Uh, you got plenty of room to get out of this trade before you get down here. So I like just going short below that doji. Again, just because it's a doji, just drop you a limit order. Wait for it to break lower, then drop your limit order in there. People ask me about that all the time. No, don't just, as soon as you see bar ticking lower, wait for the break lower. That's the trigger. If it never breaks lower, the trade never triggers. So wait for the trigger, drop your limit order, and you see you could have gotten filled all the way back a tick in at least, and then it takes off again. And when you made that little double bottom right there, there's really like a little second entry short counting from right here. So another reason you might have entered there. And look how bearish that bar. These first two bars kind of confirmed the trend line, and then this came back and tested it again, and then even again before it broke lower. So that's a good sign. And it was really tempting to go long here or here, but I just think it's too risky. Now that you're not really making higher highs and higher lows here. These are stacked up all kind of straight across. There is a failed second entry short here, and there is a second entry long counting off this low. So if you took that, the only way you could take it was if you used a limit order, and I don't think you would have gotten filled well enough. Let me just see. It might have even worked let me just see. If you entered on a stop, your entry would have been 69.75. Say it would have been a 4-tick failure, and then it makes a double top. You would have got a chance to get out with a tick or two, but that would have been all you got out of it. Because if you kept your stop where it really needed to be right here, you would have survived either way. But I just think it's too congested looking. We're not down to the lows yet, so there's a chance it could try to go lower again. We did get the break and a new low though. So it was really confusing. And so what I always tell people, when you're not sure, just sit tight and wait, and you'll get a better trade. And but you do have the break here and a new low, so you could go higher, and you do get a little channel working up here, and you get a two-legged. Actually, before I start that, there's a little trading range here, and you get the breakout, the pullback, and it looks like it's gonna. It gives you a second entry long, and it fails. So you might have considered taking that as a trap trade, and it would have worked, but I think it's still risky. I think it's still kind of slow and congestive, and not much happening here. But when you get the failed second entry long and it bounces off that low again, I liked going long there. When it broke higher, you could just put a stop because that's a nice reversal bar. Easy scalp on that one, and then it's headed lower again. But you do have a little bit of a channel break, move to a new high. Now you got this channel working down, but I don't see anywhere, unless you entered right here, I don't see anywhere to enter this one. And you never know that you're going to make a second leg up. Of course, it never breaks higher. If it would have broke higher and then turned down below that little doji, I might have liked it, but otherwise, I just don't like it. This is getting too flat here. And of course, when it comes down to the low, it bounces again. But you really need to wait on a second entry. But then it makes another new low, and it pulls back, and you don't get your second entry till right here. And then I like taking this. Then notice you got your break and a leg, and one leg down, pull back in a second attempt. Nice double bottom, and look at that reversal bar. Closes on its very high. I like that one, and it was off to the races on that one. That was probably the best trade of the morning. It didn't go quickly, but it was a nice move up. And you got a little tight channel working up. You got your break, and you tried to go lower twice. You got a second entry long right there. I considered using a limit order here, but I went ahead and used a stop, and I did take this trade. And I considered using a stop. And I considered using a limit order, but instead I went ahead and put my stop there. And you can see I'm glad I did, because if you use a limit order here, it did not come back. So this is one of those you had to have your stop or you didn't get any of it. And then, of course, this was a little surprising here. It just rocketed straight on down. And a lot of people were looking at this as a range day and a failed breakout. And that's where your range would have been at the time. And it breaks out. But still, you got a bigger channel and you're probably going to get a retest. And there it is. And it didn't look like we were going to get one. I was questioning it myself. But you see, we got a retest. And if you just follow the channel, you got your break here, move to a new high, you got another chance to try to go high. I wouldn't be entering any trades here on a trap or anything though. And I drew this line here because I want to remind myself to talk about this setup, because I just had a conversation with a trader earlier today about a similar setup. He's had a situation lately where he's taken trades like this, and there's not room before the next swing. Doesn't matter if it's the high of the day or whatever. When you don't have enough room between your entry and the last high, if you're going long, or your entry and the next low if going short, they're suspect. But the reason I like this one is because we were looking for the retest and noticed my channel working up. That's the first break. So the odds are we're going to make a new high here, but we're looking for a retest of this high as well. And that's the first break of this little channel. Plus it bounced off what had looked like the previous highs of the range. So that was another good sign. It is a little congestive. And here again, because of the reason this one took off, I just used a stop. A limit order would have got filled on this one though. It did break higher and work back. And so, but you know, that's the using limit orders are a much more conservative entry, but a lot of times you're going to miss the best trade. So this one never went more than a ticker, maybe I think 2 ticks against me. But actually, if I entered here, it would have been 2 ticks against me. That's the most it went against me. But it was worth it to make sure I didn't miss that trade. And I mean, 2 ticks is nothing. So it wouldn't have surprised me at all if it didn't break below that bar after I entered and then shoot off again, because that's what I would have liked to have happened, and then enter on a limit order or wait on it on the second move up to go in with a stop order. But you're going to miss too many trades trying to be that conservative. So, and notice this is one leg back, a move up, and another leg back. So if you went to a smaller chart, because this is real tight and the market's real slow now, we don't look at the other charts. You need to be able to see it on this chart. So make sure you understand that. But that's a 2-legged correction. So that's also a second entry long. So that's a little more advanced, and I don't even want to go into that in the video because it's difficult to discuss, but it's something that you can learn later. But until you get better at it, you probably just skip that trade. So, but the reason I want to discuss that is because the other trader, that's the kind of trades he's been taking over and over, and they fail, and it's not a high probability, but under the right context, it's like everything in this. That's what's so hard about this is I'll say don't take a trade right there, and then I'll turn around and show you one that I took there that works. And but you have to be able to understand that there's no specific rules that are written in stone. You have to take everything in the entire picture into context. And what you're looking at here is you hadn't had a break outside the trend line yet, and you're looking for a retest of the high on this little trend channel, and you're still looking for one on this bigger channel over here. Plus, this is your high of your channel, and there's really 2 pieces to it here. It's like a mid and an upper, and you're bouncing off the mid, so you're probably going to go back to the upper side again. And this was right across here, and you can see that's exactly where we went to, and I got just enough moves to get out of this. And this something else that was also interesting here was when this didn't fill. I actually got most of my contracts filled before this broke higher, but there obviously was not a lot of buying because I watched it take off 2, then 4, then 5, then 8. So it took about a minute for me to fill 10 contracts right there at that high. So there was obviously not much volume, not much buying, and that's the first time I've noticed that in a long, long time in the ES. So it almost convince me to exit the trade, but I said, you know what? If I'm getting filled every time it bumps, I must be the next one in the queue, so I know I'm going to get filled. But I just thought that was real interesting. I've never seen it do that, but it bounced off my order. I was trying to exit 10 contracts right there, and it bounced off that order umpteen number of times before it filled them all. So it was obviously just a little buying one at a time contracts, or if somebody would have jumped in there and bought even 10, it would have filled me instantly once it started uh, hitting my, once I was in the queue. So I just thought that was interesting that it did that because I've never seen that happen before. So it was a pretty interesting thing. And so that's pretty much what we had today. And not much else you can say about it other than it's a range. If you back, it's a little easier to see sometimes when you back out. So you can see it's a two-tiered range. We were kind of in this inside, but this is a clue. When you find that you get a big move in the overnight, and then you kind of get stuck in a tighter range, and you can see right there. There's kind of an overshoot here and maybe an overshoot there, but you already had the overshoot earlier. But once you got you got your double bottom or whatever across here, you actually tested it 1, 2, 3. You tested that point 3 times. It could never get a close below that. You actually got a move below, which is good for a trap a lot of times, but you didn't get a close. But you do have a big move out the other side. What that could mean is either your range highs up here, or you may make another move that's similar to this, and that's just it just got part way into it that time. So something to think about. Again, don't trade on that idea. It's just something to watch for, and you may not remember it next time, but until after you see it. But then after you see it a few times, this stuff starts to click with you, and it's just part of it. Just like this, I've told this guy a bunch of times, don't take that trade. It's not a high probability trade because we could have just broke up here and got one tick higher and turned down. Or we could have got up here right to here, and I may not have got filled on those contracts like like I wanted to. And so it's interesting. You just have to understand the context, and you have to be following the rules. And if you saw this bigger channel and you knew this was probably the goal, or if you saw there's 2 channels here and you figure we're working to the high side, then that gives you a reason to stay with this trade. A couple of reasons. But if it's not, if this was the high of day, I wouldn't have taken that period, even knowing I had enough room probably to get out. I may not have taken that trade. Not unless the high was right here and it pulls back. So I hope that's clear. And but that does have a lot to do with why sometimes somebody will say, well, sometimes, and that kind of goes back to this area right here. There's a lot of times when you saw this, that flat in EMA and that kind of thing going on, that you wouldn't want to take that trade. But if you see the big picture and you understand what's going on and you got more than one reason to enter the trade, then that changes things. And that's why that's why you cannot write it. I mean, if it was just a specific set of rules that you followed and they were hard and fast, you could write programs to do this and we wouldn't even have to trade. The computers could do it. But you can't write those specific rules because there's some places that rule you won't want to follow it, and there's other places where you gotta follow it. So you're better off to know the rules and stick to them pretty strongly. But as you get better and you better understand and can read the chart better and you better understand what's going on, then you start to see times where it's okay to do certain things that might be wrong to do at other times. So I hope that's clear. This stuff is so hard to put into words. It really is, and it's so hard to understand, and that's what gets frustrating, I think, for some people, because they want something structured. They want these specific rules that say you do this or you do that, and most of our rules are pretty straightforward. There is no rule that says that you can't go long without room to scalp out before the next swing. But you've heard me say it a million times, that's a suspect trade. So you got to be able to know what you, unless you know what's going on here and have a pretty good understanding of price action, don't take that trade right there. I guess that's what I'm trying to say. Because, but there is another reason to take that trade. Notice the new low here. First entry, pullback, second. It's also a trap. So that was the other reason. And the other reason I use the stop, because a lot of times on those traps, if they've trapped people, all their stops are right above these bars, and it hits it and it rockets up. And it did kind of rocket up, but then it got harder to go from there. And so obviously there weren't a lot of people trapped here, uh, but there were enough that look how bullish that bar looks. And notice why you have to enter here. You can't wait to enter up here, because then you don't have enough room for this high. And this is the high of the day, so that's super important high. And you may not breach that high. So there's a lot of pieces to this thing, and you can't learn them all. And people say, I've been doing this for 2 years and I'm not a bit better. Well, you're probably better, but you're probably still not profitable. You're still not making money. And I know that's frustrating. And trust me, I've been there. I was that trader. I didn't do this. I didn't just pick this up and start making money overnight. It's not easy to do. Um, it's just not easy to do. As you get better at it, it gets easier and it gets doable. But you have to believe you can do it. And I've had another conversation that's gone on for a long time with a trader that's really had some success at this. I think he actually posted a reply, but a lot of this is mental and it's psychological. And if you don't believe it'll work, you'll never do it. You have to believe in it. You have to know that it works. And and I think that's why a lot of times people, demand that I show them my tax returns, and that I show them that I can do it. And if you go back and look, I've shown my stuff a few times, but I'm not going to show it every time somebody comes into the channel and see the FOMC news is hit. This thing's getting volatile. Let's just watch it a minute, and then I'm going to wrap this up. I've said enough. Look at it go. And the price action doesn't lie. So there's probably going to be, let's just go ahead and find our trend line here. There's a channel working down. There's a trend line working down. How long it holds, that's to be seen. But it's there. And this is probably the weakest FOMC day I've seen so far in a while. Look at it go. It's still real volatile. It's acting crazy. We hadn't got it. We didn't really get a close outside yet, I don't think. I don't want this video to get too long. It's about 34 minutes, because then it takes it forever to. But I just enjoy watching this stuff. Usually you can't sit here and guess at it this long. It's moving too fast, but it's still volatile. That probably means that there's not any changes. And you can see how even during high volatility, the price action still works. The problem is it moves too fast to read it. That's the problem. So this one's not moving that fast, but I still wouldn't want to try to trade this, to be honest with you, because if you do get what looks like a good trade and it triggers, and then suddenly it flips the other way, it moves, you get stopped out because your stops are too tight. When the volatility is this high, it changes the rules on your stops and your targets and all that stuff. You can't trade with a 2-point stop when the market's this volatile. And a good example is, look at this bar, 1870 and a quarter to 1870. That's a 4-point bar. You can't safely trade that with it'd take 4 points to get a stop. It'd take a minimum of 4 points to get a stop below here, below that bar, and that's the only safe place to have your stop if you were going long, assuming. But this is working down, so you got to get your stop above here if you were short right now. And it may take 4 points worth to do that. And sometimes, you'll see bars that are 10 points when it's real volatile, but look how that little range is still holding. And this thing's pretty volatile. Okay, I had a slight interruption there, but you can see that we had this little channel working down. We had the break, 2 legs down. We really got a new low as far as closes go. We couldn't really get below this, but you can see this was when it was real volatile. And this was really a fairly weak FOMC day. I haven't looked to see. Obviously, there weren't any surprises. I'm sure that nothing's changed. And but you can see we had a channel working down, a break, but you can see how big that break is and how volatile that move was up and back down. And then we started another little channel up. So, but anyway, this video is long enough. I'm going to wrap it up. I'm probably going to go back and edit a little bit of it, some of the less important stuff out. Well, actually, there's one other thing I want to talk about here. Somebody sent me this chart, and I want to show you this. They had the trading range noted here. I don't really think they got the highs and lows down right, but they're saying they faded the high, which they did really fade the high up here at this red line. Actually, if you look at the red line, I think they do have it pretty close. But notice how they took the trade here. That was a terrible trade. They've got the little range working up, and that's the first break. You know you're going to get a retest, and that's not a very good signal bar either. So I'm not surprised that that first attempt to go short failed. We normally only take a second entry. He's saying this is a second entry from the low, but I guess if you count from there, first entry and then second entry. But I think that's no, I don't think that's. You're looking for a second entry off the highs. If you're fading the high of the range, you're looking for that's a second entry off the low, and you didn't take that trade. And look at that beautiful setup bar. And you did have the original range, the break, and the new low. So you can see this bigger one doesn't fit very well. Then they tried it again up here at the top. Second attempt to fade high. Same thing. You got your channel. I don't think that channel is exactly right, but using your channel here, that's the first break, and you want to wait on the second entry. I'm not sure. Let me just go back and look at my chart and see if that. Okay, yeah, you got the channel. I think you got the channel right there. That was coming off the 8 o'clock, which would have been 9 for me. So yeah, you got the channel exactly like me. Now this is, I would have, you don't have it like me. There's a shorter term one here that runs up to here, and you got a break and a new high. I guess this is where this is at. Looking at it. That was the first two swings right there. You could have got it off the highs. And but there is a shorter term one to break. But again, you didn't wait on the second entry. The second entry is counting off the high, and that's a first entry. You would have waited. The second entry is down here. Look, first entry, little pullback, second entry, and you don't want to go short there. Plus, you're still looking for a new high. So based on the way you got your channel, so again, you're not entering at the right place or the right time. So hopefully you see that. And then finally, third time's a charm. Finally, they got the break of this channel, moved to a new high, and then you're selling off. But I don't think there's even been a break yet. I think this is the first break because there is the shorter term one, but you don't quite have that drawn right. But the reason this one worked, it's a failed breakout. I still don't, I mean, it's a little aggressive, but you do have a break above the highs now, and so it's going to be you got a double top finally in place here, and a failed break, and you've actually had a couple of legs up. Let me go back and look at my chart. You see how mine, I didn't mark that trade obviously, because I think you needed to wait on a second entry, and I don't even like my second entry. Or actually, this is where it was right here. I'm sorry. No, it's not. This is where it was. I didn't mark that trade. You could have seen it as a breakout, but notice I didn't mark it because it's not a very good setup. So this was a great setup here. You want to wait on a second entry, and you just don't get one here. Now, you got one here, but it's not a very good setup on it, and you're still looking for a new high. So hopefully that makes sense to you. I hope that does anyway, but you're just not following the rules properly here. So anyway, that's why you don't gamble on trying to catch highs, because it worked. Look how great it worked there, but two more times it failed. So it fails 2 out of 3 times, and who knows, if you don't get a big move like this, you probably lose money. You can't pick tops. You got to wait on the right setups. Everything's got to fall in place. So I hope that's clear. But I'm going to wrap it up. Um, this is Mack with PriceActionTradingSystem.com, and we'll see you next time.